Trading in financial markets can be a complex process. In this video we give you a simplified tutorial that covers the basics for beginners. This guide will introduce you to the fundamentals of trading, including key concepts, steps to start trading, and tips for beginners. 1. Understand the basics. Financial markets. Learn about the different types of markets, such as stock markets, forex, foreign exchange, and commodities markets. Each market has its unique characteristics and instruments. Trading instruments. Familiarize yourself with the various instruments you can trade, like stocks, bonds, currencies, and derivatives, futures, options. Technical analysis versus fundamental analysis. Technical analysis involves studying price charts and using indicators to predict future movements. Fundamental analysis looks at economic indicators, company financials, and other factors to evaluate an instrument's intrinsic value. 2. Choose a market and instrument. Decide on which market you're interested in and select an instrument within that market. Your choice should be based on your interests, market understanding, and risk tolerance. 3. Set your goals and trading style. Identify your trading goals, for example, long-term investment versus short-term gains, and choose a trading style that fits your lifestyle. Trading styles include day trading, swing trading, position trading, and scalping. 4. Educate yourself. Invest time in learning through books, online courses, and webinars. Topics should cover trading strategies, risk management, and psychological aspects of trading. 5. Choose a reliable broker. Select a broker that is reputable and regulated in your country. Consider their fees, trading platform, available instruments, and customer support. 6. Open a trading account. Complete the application process with your chosen broker, which will typically require providing some personal information and possibly financial details. 7. Start with a demo account. Before risking real money, practice with a demo account to get familiar with the trading platform and test your trading strategy in a risk-free environment. 8. Develop a trading plan. A good trading plan includes your trading goals, risk tolerance, criteria for entering and exiting trades, and money management rules. 9. Implement risk management. Always use stop-loss orders to limit potential losses. Manage your risk by only risking a small percentage of your account on a single trade. 10. Start trading. Begin trading with real money but start small. Monitor your trades and adjust your strategies as necessary. 11. Keep learning and stay updated. The markets are constantly changing, so it's important to continue learning and stay informed about market trends, economic news, and technical analysis developments. Tips for beginners. Patience and discipline. Stick to your trading plan and don't let emotions drive your decisions. Risk management. Never invest more than you can afford to lose. Continuous learning. Always look for opportunities to improve your knowledge and skills. Record keeping. Maintain a trading journal to track your performance and learn from your trades. Trading can be rewarding, but it's important to approach it with caution, especially as a beginner. Take the time to learn and gradually develop your skills and knowledge in the market.